right.
Money. Welcome to the How to Sell Insurance podcast. My name is Ryan Federico. We are back, baby, from a little hiatus.
That's
Glad
right.
to be back with you all. Mr. Keith Fonseca, DJ Debt Free, is out helping some people get debt free today. So you got myself, Ryan Federico, and the man, the myth, the legend, Mr. 100 and however much premium in 100 days, Ashton DeLangoLunday, rocking Pensacola, Florida, out of an amazing event, the Ignite event in Pensacola, man. Had, would you have, guess, had like 90 participants in that event?
Yeah, right around.
Something like that? Oh, man. That's awesome. That's awesome. So the most important question, though, is what did you shoot at the golf course the morning before the event with the Prabulas, who own a golf course, and Griff Martin, who's an avid golfer?
We stopped keeping track, I think, after hole like 13. Not because we're doing bad. Huh? I know, one of those days.
Sure it was.
No, we were running short on time. So I don't think we bogeyed on any hole. And if we did, it was only one, maybe two. And then every other hole we parred or birdied.
Nice.
So basically, we either ended even or probably, 3 or 4 under.
Awesome. Well, nobody wants to hear about our golf game. Although I will tell you, I shot a legit like 78 the other day. And I was like, wow. I was just like,
was the whole course par? Man. Was it like 60 or what was the par?
Exactly. It was a 51 par. And for those of you guys who don't know golf, you have no idea what we're talking about. You're not laughing right now, but we are here today to drop in. We got a grab bag topic. So people have been sending us topics. Hey, talk about this, talk about this, talk about this. We want to make shorter videos for you guys, so you have some digestible content. Today we're going to talk about what to do when a client already has a policy, when to replace a policy, when to not replace a policy, what somebody having a policy tells you about them. And so I guess if you want to introduce sort of your thoughts about the topic, Ashton, I know that you recently ran into somebody with a policy that wasn't necessarily the best for them, and you were able to get them a different policy. And let's just start there, man.
Yeah, obviously there's two ways you can run into this. The first is either on the phone or in the appointment. So depending on how you're doing this, maybe you're out there door knocking and you're just running into appointments that way and setting it on the fly. So maybe the only option for you is in the home. But if you're running into it on the phone, you want to get as much information as you can. So every time I run into that on the phone, I'm asking those questions. When did you get it? For us, the biggest thing we do is mortgage protection. Hey, did you cover the whole home? Or if it's, final expense. Hey, we're able to cover all of those expenses that you're looking for. No, only part of it. Okay, how much? Or yeah, I was able to cover all of it. All right, well, how much are all those expenses? $20,000. Okay, great. Whatever that looks like. Either way, you're figuring out how much coverage, what it is, and something. If you've been in the industry for a while, and I mean like a month or two, you should know. You should know. On average, what certain prices sound like. If someone tells you it's $10 a month for $100,000 in coverage, and they say it's a term, if you've been here for like a week, that should sound a little weird. So if you've been here a little while in the industry, a month or two, someone throws out a weird number, you're like, I've never run a quote that's come back like that. They probably don't have what they think they have. So figuring out what they have is going to be crucial, whether that's on the phone or in the appointment.
For sure. I think that, man, it's so important. I like to ask, I sort of like to go in reverse when I run into something, like especially when I run into somebody who has coverage on the phone. And first, you should always be asking if they have coverage on the phone. It tells you so much about the client. I love asking, what have you seen already? Because if you're whether you're generating clients via warm market and you're sending messages out on social media, or you're putting up your own ads, or you work leads, whatever it is, by the time you're talking to them, they've piqued their interest, right? They've told you that they're interested. And so we want to find out what they've seen already, because 90% of the time, if you pique their interest, they're looking for insurance and they've already seen something, whether it's through their job, whether it's through, a mailer that they got from, one of those insurance companies that does the mailers, whether it's, their car insurance guy, or girl told them that it was going to be X amount for insurance, or they got a letter from their bank. They've looked and they've seen some prices and they have some idea of like how much insurance costs. And now they want, more of like an expert's input. So understanding what they've seen, understanding what they have is important. So let's say that, I find out that somebody has coverage. The first thing that I want to ask is, if you die, how much pays out? Right. And that's pretty much, I want to back into that because that's what most people remember is kind of what the death benefit is. Just, hey, man, if you die, how much pays out? About how much a month do you pay for it? And that will tell me pretty much all I need to know, right? And then I can go, how long ago did you get it? Yeah. And if they're like, 5 years, 7 years, I can kind of backtrack and use some quote generators and go like, it's probably a universal life, or, it was probably a 10-year term, or, it's probably a term with return of premium, like whatever. I'll be able to at least gauge what kind of policy it is if they don't give me more information. But I think that the most important part for me is like, man, I love people who already have insurance. We get this question all the time. It's like, well, what do you do if they, they're requesting mortgage protection and they already have $1 million policy? They're like, well, check it out, man. Like if they filled out a lead, they had that $1 million policy while they filled the lead out. Right. Yeah. When they filled that thing and they mailed it back to us, or they called in, or they did whatever
Especially
they
if
did.
It's brand new.
Yeah, man. Like they had that $1 million policy before they even talked to us. So number one, they believe in insurance because they bought it before. Right. Number two, they already think that their coverage is insufficient. Otherwise, they wouldn't have requested for more mortgage protection, or for more life insurance. Or they responded to a life insurance lead or a Facebook ad, or if they, one of your Facebook posts piqued their interest and they're like, hey, I got $1 million policy, but I'm interested in hearing more about what you got. Probably they don't feel like that $1 million is sufficient, or that 500,000, or that 200,000, whatever it is sufficient for them, or it's going to expire or whatever. So I think that, approaching it that way, and a lot of times I like to see, can I keep the policy they have in place first? Unless it's a terrible policy. God, some of these P&C companies, nothing against you guys writing P&C. I know that you focus on P&C and not really life, but some of the stuff that I've seen from, I'm not even going to name the companies, but your traditional car insurance and home insurance, some of these policies are just absolutely horrid policies. They're super expensive, and the prices increase, and they don't have great benefits, and, they're just bad policies versus the other life insurance companies that do policies like that in the open market. A lot of times it is going to be in the best interest of the client to replace that policy with something better, whether it's cheaper, whether it has living benefits, whether it's got an accelerated death benefit of some sort, whether the price is going to stay, level longer, right? It's amazing to me at some of these coverages that are out there, man. So first thing I want to do is I just want to see, can their policy stay in place? Because they're a buyer, and I want to, importantly, I want to support that decision. Because a lot of people don't realize this, man. If there's one golden nugget that I hope you guys can listen to and hear from this, if you get somebody who's got insurance and you tell them that they made a bad decision by getting that insurance policy, they're going to second guess the policy that you put in front of them. Because they already made a bad decision, and they're going to be like, well, I don't want to make a second bad decision, and you may even corner yourself into somebody telling you they need to think about it, or, they need to process it, or they need to talk to somebody else about it, whatever. So as much as possible, we want to support their decision, even if you're going to replace the policy. Just go, hey, I really love this. At least you got some protection put in place. Looks like, that other agent did a great job with you, at least getting you some coverage put in place. They probably just weren't appointed with this insurance company, and we can save you some money and get you better coverage. And, I like to, as much as possible, support whatever they did, because it makes them feel like they made a good decision, and makes it easier for them to make another good decision. Right.
Yeah. And that's a key part. And that's kind of where we moved into, now that we already know what we got on the phone, or in that appointment, and we're breaking it down. And the first thing is, if they have it, because sometimes maybe the agent just wrote it, but if they have it, go grab that policy. Go pull it out. Because so many times people don't know what they actually have.
Or they don't even know where their policy is.
Yeah. Exactly, and that's another thing. And unfortunately, a lot of people, maybe just the South, I don't know, maybe the West is different, Ryan. But unfortunately, some people are just a little too trusting.
Oh my God, yeah.
And that's obviously it's a pro and a con. But that con is they unfortunately believed everything that agent said. Hey, everything they said was absolutely the God honest truth. But then when you go get it, you're like, oh wait, this doesn't say whole life. This actually says term. I thought this was permanent. And I'm like, oh, okay. Oh wait, this says accidental. It doesn't say
accidental
term.
death.
Exactly. And so now you want to make sure that you're actually identifying what they actually have. That's always the first key. And then, did the agent do anything wrong? Like you said, I had a case literally yesterday. I went out to a home, and they put non-tobacco on an application for someone who uses tobacco. So obviously,
guys sitting there smoking, and there's ashtrays everywhere, and they're just like, "NT, baby, let's clean sheet that
exactly.
bad boy."
And the agent actually went out the night before I got there. So he wrote a policy and goes, "Oh, I work with that guy that's coming tomorrow. Just tell him, don't even worry about it. Don't bother. Tell him not to show up. Don't even answer the door if he does come. I work with him. Don't worry about it." And he didn't. It was at a completely different company than I work at, and just answered all the questions. No, and no tobacco. He used chewing tobacco, so you got to know your carriers and go, hey, some carriers are going to give a non-tobacco rating. The one he wrote didn't. You're not going to name carriers. But then we said, all right, we can get this with a carrier that will give them that non-tobacco rating for only using chewing tobacco. And the client didn't know that. And that's big, They're going to come back and they say, hey, you lied on an insurance application. You, as the client, signed and said, I attest that every single answer on this application is true to my knowledge. You're lying on an application. Insurance companies don't really like that. And so now you're able to help them get what they actually need.
And definitely give them the idea of like what would happen, and I've seen that happen several times, and there's one company in our industry, no names named, but you probably know who they are, who's notorious for this, right? Who's notorious for clean sheeting and lying on applications and jamming people through. And there's one carrier in particular that makes it real easy to do that. And that happens to be the carrier that company writes all the time. But what happens is like being able to explain this to a client and say, hey, listen, I understand that, this might be all right, but if you die in the next 2 years and, that insurance company does a contestability claim and they start going through your background, they're going to see immediately that you were listed as tobacco or non-tobacco and that you definitely use tobacco, and they're going to deny this claim. And they're just going to refund the premium that you've paid back, and they're not going to give you that whole death benefit. And that's including, I met a guy, it was probably about, 3 weeks ago, maybe a month ago. He had COPD, and he was on oxygen. And, guy was in terrible shape, and it's a very difficult, product to, a difficult condition to put a product on. Yeah. They're on oxygen, right?
Obviously, you write a term. Obviously.
Yeah, well, yeah, exactly. With living benefits, and return of premium. Now, so we were going to have to go guaranteed issue, but, an agent was there before I was and wrote this guy a, clean sheeted. And for those of you guys who don't know what clean sheeting means, it just means you answer every question on the application yes and cross your fingers and hope, or you answer every question no on the application and you cross your fingers and hope that the insurance carrier approves it, right? Yeah. And if you've got and if you've got like an instant decision, immediate issue insurance carrier, a lot of times they don't check. And so they're just they're relying on you to do really good work and to not be fraudulent. And so there's a lot of agents that go out there and they just kind of cross their fingers and hope for the best. So that's what happened with this guy. With that same company that you're talking about, Ashton. And they basically wrote him a policy that, is an immediate decline for COPD, definitely immediate decline for oxygen. And said, no, not taking any of that stuff. And then they just told the guy, hey, man, if you die in the first 2 years, this isn't going to pay out. right? They're just going to give you a refund of your premium. So they sold it like a guaranteed issue policy and told the guy, like, yeah, we're lying on this application, and if you die in the first 2 years, you're not going to get the death benefit. And, you know, so the guy at first, like, I was telling him, well, we should probably get you a guaranteed issue policy. And the guy was like, well, I don't see any difference in that. You know, like, if I canceled this one and then I got this guaranteed issue policy, but it's still not going to pay out if I die in the first 2 years. And this is where a lot of you guys may not know this, but every insurance carrier pulls a certain portion of their business and they check it at, you know, the 18-month mark, at the 2-year mark, when it's going to be coming, you know, and it's going to go full, you know, full payout. They check it. You know, that this particular insurance carrier is notorious for this, where, you know, right around that 2-year mark, when they're going to be on the hook with no contestability, they like order everybody's medical records and they take a look at it. And guess what? If they see tobacco, boom, they'll cancel that policy in a New York minute. I've had a policy canceled for tobacco use from that particular carrier. Gosh, I want to say it was like 21 months or 22 months into the policy. And they charged me back for it, even though it was 2 years later, and they took the coverage away from the client. And I didn't even lie on that application. They just found tobacco use in the guy's history, and he still contests to this day that when he did the application, he had been 12 months free of tobacco. But they, you know, they pull it. So what's going to happen to this dude when, you know, 18 months comes and they pull his medical records and they see COPD and oxygen? They're just going to, you know, kick him to the curb. So I was able to get him a better policy that was sold in the right way. That other agent didn't want to do it that way because they're not going to get paid as much commission on a guaranteed issue policy as they are on one that they, you know, fraudulently lie on. So there's definitely some situations where it's going to be 100% in the best interest of the client for you to replace their policy with something better.
Yeah.
For sure. For sure.
And those are those situations you look for. Yeah, you just go in those homes and you go, hey, do you absolutely have what is best? If you do, great. You know, you had this before I got here. You know, that was already in place, already there. So obviously you're looking for addition. But, you know, you have to assign those jobs and assign those values. That's kind of that first part. Is you're going in there and you're going, when you got this policy, what did you get it for? Why did you get this $20,000 policy? Well, to take care of the funeral. All right, what do you think that's going to cost? 15. All right, what's the other 5 for? Oh, well, you know, what if they want to cater? What if they want, you know, whatever the case is. So now you're assigning a job and assigning a value to every single thing. Savings account, 401k, insurance policies. You know, I had a lady one time that had $1 million policy, and she had a $200,000 home. And we started assigning jobs and assigning values, and she says, you know, I have 2 minor children. I want that to provide an income if I pass away. So, all right, well, how much do you think that costs? Maybe $20,000 a year for both of them, because they're going to go live with, you know, ex-husband, maybe a little bit extra water and electricity, but food, maybe daycare. They go to public school. So $20,000 should be fine to cover living expenses a year for them. Okay, great. Now, what else do you want this money to do? Well, I want it to pay for their college. All right, well, how much do you think that costs? I don't know. All right, well, where do you want them to go? Anywhere they want. All right, well, state university, you're looking at $40,000 a semester on average. At least that's what it was when I was looking at schools, even in-state tuition. Out-of-state tuition was even more. So you're looking at $80,000 a year. That's $320,000. You have 2 kids. Now we're at $640,000 out of your $1 million policy. All right, do you want them to go to master's, or do you want them to get a doctorate? Oh, yeah, if they want to get a doctorate. My one daughter wants to be a dentist. My other one wants to be a surgeon.
Let her
rip.
rip.
Great. Yeah, how much do you think that costs? I don't know. It's safe to say at least as much as an undergraduate. She was like, probably. I was like, all right, we're at $1.3 million. You don't even have enough money for what you want that to do. And you have a $200,000 house? We better be getting some more. It definitely sounds like we need to add some coverage. Wouldn't you agree? And obviously she said, yeah, obviously we need to add some more. And so a lot of people think that money goes a lot longer than it does.
Totally. And like, I think under coverage is a big deal. I also think over coverage is a big deal.
It is.
You know, and I want to make sure, because we're going to wrap this up here. We want to keep these short.
Yeah.
But we want to make sure that everybody knows we always want to do the right thing for the client. And anytime that we start doing the best thing for us, we start getting in trouble. And, we see agents like that all the time. They're how our industry gets a bad rep. We see companies that encourage that type of behavior and agencies that encourage that type of behavior. And again, they're doing damage to our industry as a whole. And so we want to make sure it's in their best interest, and we don't want to replace a whole life that they got 5 years ago, right? Because there's no way we're going to be able to compete with that. We want to help them call the carrier and lower the face value if they need to, or go that extra mile. So make sure that we're doing the right thing by the client. And I think that first and foremost is don't get scared if they have a policy. That means they're a buyer. That means they believe in insurance, and they, still felt the need to reach out to you in whatever way they did to get insurance. Second thing is make sure they know what they have, because it's so confusing that people don't know what they have a lot of the times. They don't remember. They don't know where their policy is. They've had it for 4 or 5 years. It's collecting dust somewhere, and they just know it gets charged every month. And a ton of people have told me, man, I've got $500,000. And then we open up their policy and it's $50,000. You know what I mean? That happens a lot. So make sure that they actually know what they have. If you can review a policy, awesome. Even if you're doing Zoom, even if you're doing phone, if you can have them take a picture of it with their phone and text it to you or something like that, so you can review their policy. Whatever you can do, make sure that they know what they have, so that when you start into number 3, which is there a better option for them? You know what the intent was, why they got the policy, how much they have, what their needs are today, and you can make an educated solution. And one of the things I wanted to add before we shut it down was overcoverage. A lot of times people will get insurance from their financial advisor.
Yeah.
And their financial advisors, well, they sell insurance. They're not insurance experts. They're investment experts. I like to think of it as like there's, an ophthalmologist who's an eye doctor, right? And then there's a podiatrist, which is a foot doctor, right? You're not going to take foot doctor advice from the ophthalmologist. They're both doctors. They both went to undergraduate. They both went to medical school. They know basics of how to do it, but then they majored in specialties that they practice their career in. That's the difference between us and financial advisors. So financial advisors believe in insurance. They believe that you should have insurance. But a lot of times if they're going to write insurance, they'll just kind of scratch a number out and be like, how about $1 million? How about 1.5? You know what I mean? It's just like 18 times your salary is what you should have, and it's like, well, hold on a minute. What do we want to do? What are your goals? What's your net concerns? And, sometimes you can find people with $1.5 million policies that really need $1 million policies, or people with $750,000 that aren't really concerned if they die. They're concerned if they have a major illness and they can't work, and they need some critical illness coverage, or they need some disability coverage, or they need a more of a living benefit policy or something like that, just because their financial advisor didn't even know that existed, right? So we want to make sure, like Ashton said, that we hone in on their goals. Why did they want the coverage? What are they afraid of? What's the impetus for this meeting? And then make sure that even if you need to research it a little bit before you suggest an option to them, just book another appointment with them and research it and tell them, I want to make sure we get you the right thing. Don't just flush a policy because you need to put money in your bank account. You know what I mean? So what are your
100%.
last thoughts, Ashton?
No, I mean, that's it. Definitely figure out what they have while you're on the phone if you can, or at least just get a general idea. I love knowing even what company they wrote, because if being an insurance broker, that's a huge insight. We have access to over 80 carriers. If it's one of the carriers I work with, which 9 times out of 10 it is, I can go, hey, that number is right, or I can go plug it in my system and it's way off. I know it's off, and now I can go help them. Get all the information you can. And, figure out what those goals are. And then if you need to replace it because something's wrong, then absolutely. But always be, thinking, like you said, in terms of addition, and see what you can do there.
Heck yeah. Well, we're excited to be back, and you will see more from us and more topics from us, as well as Mr. DJ Debt Free, who will be joining us again probably on our next episode. Look for some live interviews coming out of our event in Las Vegas on June 15th. So look for us to shoot you some live interviews. We also have Orlando coming up on June 1st that we'll probably get some one-on-ones done, and we'll be putting a lot of content out there to help you guys. So keep it going, help some people, make an impact on some families, and keep tuning into the How to Sell Insurance podcast. Go to writemoreapps.com to get our latest episodes. See you, everybody.